of Invest Data Trading Academy live with Ambrose. Yes, I'll tell you that the global market is, as we speak, is in green. We're seeing factor driving those markets, in green as we speak, especially since last Friday. We saw the turnaround. And also in Nigeria, we've seen a kind of form of rebound. I call it semi-rebound we saw yesterday. And that trend, it's like it's been sustained this morning as we speak. Looking at the chart, you can see that the green, it always that it's a marginal green yesterday. This hour is also a marginal green. If you are looking at the chart right now as we speak, for me, the market trying to bottom up after the MPC meeting outcome, and also, we expect that by tomorrow the T+3 time settlement for transaction also kick off as from 20, as from 28. That means as from Friday. Sorry, no, not tomorrow, as from Friday. And that's why we need to also discuss all this as we speak. And that is why our topic today, before we go to international market, is what still the topic today is still NGX bull problem and positioning reset amidst MPC meeting outcome and T+2. This is the state of the discussion today, and this is what we want to look at as the market has just opened right away. It will be our discussion right now as the market has opened. But quickly, let's go back to what is happening, in the matured market. Globally, the market are in green right away. I can see that Asia market has extended the recovery now. It started, at the beginning of the week on the strength of what we are seeing an increasing buying interest in tech companies that have also weighed down that market as we speak. And that's why I said that Asia stock market and the other instrument there has opened the midweek on a high expectation, imparting the index there positively to open higher on the strength of what renewed interest by traders in tech companies. And this has also, don't forget that the expectation of rate cut by Fed or US central bank was also impacting positively across not only US, other markets of the world. And that is what happened also, that as the meeting is coming up on the 9th and the 10th of December, there's a great expectation, or the bet for expectation is increasing. This is what's also impacting the market over there in Australia, in Asia. And I'll tell you that in Australia, we saw hotter than expected inflation figure. Even at that, we're seeing that the market there also is looking in green. But with this high inflation figure of 3.8%, we expect that yes, the possibility of a rate cut in Australia by the Reserve Bank there is slim, and that also I believe that investors also looking at that market with that eyes. But don't forget that also I've seen that interest in tech companies, both that Australia is also impacted. That's why even with the high interest figure that came, the market is still in green as we speak, getting almost 0.9% right away in the face of high inflation figure that were just released into in the market in that environment. For me, these are how investors also look at. Most times you see this macroeconomic data, the reaction and all that is also what investors need to know. How do they react to it? Now I've seen another economic event that happened in Nigeria after the policy meeting of CBN yesterday. What market did today, even that yesterday, what has happened? We'll come and discuss all that when we're looking at the general market activities in Nigeria, and also looking at the topic for today. But I believe that this is what we should have at the back of our mind, how the market reacts. That's why I said you need to follow the money anytime, any day. Also, if you look at other markets in that region, we see that yes, China market also, or Chinese, when we call it China or Chinese, you are seeing that yes, it's looking up after there's a call also between Trump and the president of China. This also expecting that the two largest economy in this their trade tariff or trade deals also will come to pass. But that also have boosted confidence in that domain on that region. I was seeing also the market open sharply this midweek over there. And also, I was forget that if you look at what is happening in Singapore, was saying that yes, the index in Singapore and that of India are also up as we speak. They're recording about 0.6 and 0.7 respectively. That means the Singapore market is up by 0.6 and that of the Nifty 50 in India is up by 0.7 respectively at this early trade over there as we speak. And that of also in Japan, being one of the major markets in that region, we're seeing a mixed performance also in that Japan market right now. But good thing is that yes, the interest in tech company, knowing that most of the tech companies are the one weighing carrying weight in these companies, in this market. That's also we are seeing the market rebounding after the previous week where concern of valuation for the tech companies have weighed down market. But on Friday last week, after the minutes of Fed, I don't know, suggest also point that or signal that yes, the rate cut is coming in December, meeting. That also have changed the mood and the sentiment, and that is why every investor must also know how to position for this event. And I remember that I've said that let's all eyes be on what would the MPC meeting be doing, in Nigeria here. Let's see, you can see that during the meeting and after, you can see how the market level want to see other factors that want to drive this market. That is what we'll be discussing when we come on to looking at the Nigeria market. We'll not slip over to what is happening in Europe market. Europe market is not left behind. I will tell you that yes, the trend of positive sentiment has continued in Europe as the Europe market or stocks open higher across the zone on expectation of rate cut in December by US central bank. And this is also what is also driving the sentiment over there. You can see that most times it's almost the same thing that drives sentiment, even when we are seeing that the peace talk in that Ukraine has back on with that of US to make sure that peace come to the zone. I think that crude oil price, yesterday was inch up, but as we speak now, it's always heading toward like almost low. But I tell you that the peace this is a weapon development to bring peace, and that also strengthen the market, the commodity market in 2026, especially as the move has been taken now that US, Russia, and Ukraine, and also the Euro leaders, the Eurozone leaders or European leaders also coming to make sure that this peace work out. If that is, I will tell you that yes, what is happening in Middle East, can see gradual peace coming over there. Let's see that trend also will tend to almost 3 to 4 years war in Ukraine and Russia. If that also will come to a pace, I will tell you that 2026 is a year that investors should look at to see a turnaround in most of the, and also already we are seeing that central banks of the world are heading towards what rate cuts, apart from few that their economic data are not. But for most of the market, I tell you, as this is a sign that we might likely to see stock market looking up. If rate cut continue, I will tell you that also weigh on the other fixed income instrument. But I will tell you that investors are going to look at what is happening in alternative market and what is happening in the equity market to always know how to rebalance their money and where fund is flowing to. It's very, very important that we have it at the back of our mind. Just as we speak now, I'll tell you that UK FTSE index is up by what? By 0.25%, and that of Germany, the DAS has opened also on a positive ground, gaining 0.7% as we speak. France and Italy are not left behind. These indices, I mean France, I mean CAC 40, and that of Italy in an index are all by what 0.67 and 0.64% respectively, following the trend we have seen in Asia, and that of also US. If we also want to go US market also in green, you can see that this tells that the same sentiment is driving the global market, and I believe that our market is gradually bottoming out today. We saw it yesterday. If that trend also closes positive today, ahead of tomorrow, the last training, ahead of Friday, the last training of the week, will also give us a signal as we are entering the last month of the year. And don't forget that we enter December, we expect to see seasonality, but because of the trend we are in the market, with seasonality trend, the same in Nigeria in this end of the year, especially Santa Claus rally and others. As we cross into December, we'll discuss others, but we'll come to Nigeria market. We're still looking at what is happening in Europe and not in Europe market with the European market. As we speak now, good one for the market, and I tell you that yes, this positive sentiment that is fairly driven in terms of a rate cut is also is impacting positively across the market. At all eyes are on December 9 and 10 Fed meeting come 2025. I believe that these are the things that's driving the market as to speak. If we look at what is happening in US properly, I'll tell you that the US market is up in green also, and also I think that most companies there are also kind of upgrading or kind of scaling their projection and also or their guidelines anyone want to call it, or guidance for the for the year 2026. That also in particular, see that Dell tech technology has also happened, and others company there using positive number has also supported this expected what rate cut in US, and also because of the delay in the government shutdown before it come out, it was a record kind of a sign or a opening, we call it. We have seen that a that came also have given a sign that yes, we have seen that consumers goods are the one driving, also supporting that we expect to see because of that close. I think the consumer sector, especially those that have free access to for food, they got it. It was a period of hit for them, but gradually we are seeing that we are seeing kind of a pricing in that commodity or food stable price pricing. That's also a good one, and for me it's a potential there. If we are saying that government is going to spend, that means those companies are going to make money come 2026. These are the things that also is driving US market as we speak. I've said about oil price already, but other things in US now can tell you that US market is in green and good one to go. If you look at what is happening in Africa, and we don't look at Africa, not looking away from Nigeria being the giant of Africa. I'll tell you that the NGX have rebounded, especially extending the trend we saw yesterday as we speak right now, and that of see what's happening in South Africa market, and Kenya, Ghana, and also Botswana as we speak. These are where you see that market is also oscillating, but good one that here is coming at end. We expected that here is expected that every trader or every investor in the market has a liberty to take profit, and that is part of market dynamics. If market is coming down, profit taking and others you all should know, and also how can you position the advantage of pullback also to buy into a position that's also positive as a trader or investor is very, very important anytime, any day. Yes, back to what is happening in the market. Look at the market data in Nigeria. We need to look at what is the data saying right away, in this market. We're seeing that yes, our data is saying that market is up marginally by 0.10%, up by 137.028 basic point. Trading around right now 143,907.38. After market has also tested as high as 144,149.83. This is the range we have seen the market this morning. It is a pointer that if at this afternoon we are seeing this trend being sustained, that will be good news for the market. And I believe that we are seeing more buyers right now in the market. We are seeing 25 advancers right now and the 15 decliner in the market. It says that the market break is positive, and we are seeing that yes, the market index, which is the Usher index, though, is also marginally in green, 0.10% right now as we speak. It's a pointer that yes, that the trend we saw yesterday is also we're seeing that sustain, but it won't stay sustain until we see the end of the trading for today. And being the midweek, we need to respect. Aftermarket also is kind of digesting the outcome of what MPC meeting yesterday. These are what we're going to discuss today. That NGX bull problem, and also amidst the outcome of MPC meeting, and also what T+2 settlement time. And we'll start from the MPC meeting. Outcome of the MPC meeting. We're giving you the data for the market right now. What is happening in the in the market is very, very important. But we must pay attention to the MPC meeting outcome, because it's going to guide our decision between now and the next MPC meeting, which is coming also in January. Now that was the last one for the year 2025. So if you look at the outcome of the meeting, it's expected that according to all the analysts, all the forecaster, market reader, and also economists, that yes, we expect to see a rate growth after inflation at hit as low as 16.02%. That means let's say 16% for inflation. Yes, we know that at the beginning of the year there was kind of a rebase, and that also have supported just also to reflect the broader economic. That's why you rebase to inflation some fine. But seeing that that has been reflected in the inflation coming down. And recently, the month under review that we also saw how good what you call the PMS or fuel in Nigeria has changed price up for that. Don't reflect, but we need to pay attention to the monthly inflation figure. We are seeing that the core inflation and food inflation for month and month is not smiling, and that says that it's possible that at the end of the day, might see the month of November. Compared that, don't forget September was the harvest period. That also reflected in but as to speak, the month of October has come. I've seen the inflation, but for November, carrying towards the festive period, prices are about to go up. But we are seeing that there are some food items that are still stable in the market. The price of rice, but I tell you, energy, transportation remain in the in the rising, and that also going to see how it's going to play out between now and January. But on the whole, CBN through their communicator have said that yes, the rate will hold on at 27%, and also the economist said 16 banks have also scaled their capitalization. What is the impact of that in our market? That is where I am going. Yet if the 15 banks are I know that yes, the international banks are among them. That means those banks are sitting on more than 500 billion of capital base, and that is good. So that these banks are solid and strong, and that means this bank will not be rushing to CBN for anything as we speak now because they are liquid and all that. But you see, as the economy is recovering, now that we want to see issues that have brought the economy to this level, especially the market that also are seeing kind of looking southward. We saw that there's a kind of external forces and internal forces. But gradually, we are seeing that yes, government, if what we are seeing also what we are reading is true, making moves to partner with the US to fight insurgents and terrorism in Nigeria. That is the recon development, and also what is the attitude of our economic managers in Nigeria, and also policy formulation, and also timing and implementation. I tell you that anywhere in the world, policy verification is king. It's very if you want clarity, that clarity is what everybody is interested in. As we speak now, we have seen that from subsidy removal to inflation of exchange rate, we are seeing where they go. But as I tell you, but as it comes to tax policies, that yes, government is eager to raise revenue, put none of us is against them, but there's no clarity in this. Even when yes, they said, oh, the poor ones will pay less, the rich one, even some company will pay less, but all these are just where clarity is not there yet, and that's why I believe that our National Assembly would have asked questions before signing into law about it at the end, and when market or sentiment perception of these laws are started reflecting on the activity that all of them are going to say they want to review. And the more thing that the attitude of going to the review, it shows that the economic managers as to speak have no coordination. And that means everyone who tend to law, who how might to your own. I see that everyone is working. If there's coordination, I will tell you from the statement of the ministers on the floor, that the Minister of Finance that is also double as a coordinating minister. I believe by now, that capital tax, capital gain tax have been clear now to give the market, foreign investor, local investor, even those that are expected to come to the market towards the end of the year and toward the beginning of the year to have to know where they are going with their decision, because I tell you, clarity is king. I've said it. When it comes, it helps you to plan and not to implement. And also, clarity helps every policy maker to implement their policy. But these days, we're seeing that policy can be made, implementation become a problem because there's no clarity. And also, when your strategy is not clear, I will tell you, you will fall in the process, because your clarity to you that is making the strategy is not clear to you. That is why clarity is king at any time, any day. That every policymaker should work on it, even though it's company. When your policy, your strategy is clear, it helps people to plan, to put it into coordination, and work with you, and result is achieved. Yes, we have seen the market trying to recover, the economy trying to recover. Like I will say that as we speak, even with the policy of the government so far, that was saying that yes, we are heading to a right direction. But that we have not arrived, because I said it anytime, any day, that in this nation we have had 6.8 GDP figure. As we speak now, we are still below 4% GDP, and that means that economy, even when we replace our economy, is still lower than what we did when we had another. When we did the first rebate about 500 billion, as we speak now, our economy is also below 300 billion in terms of economy. That means we need to sustain that rate, and we know that what really kind of puncture or deflate the first the base of the economy was this exchange rate, and also perception, and also government policy or policy somersault of the government that that deflate that 500. It is time we should learn and also put all this into practice. That is why you and I, as a trader, investor, market players, we should put all this and watch where our market goes. I'll tell you anytime, any day, any stock market anywhere in the world is a leading indicator of what is in the economy. We are seeing the market rally ahead for almost 7 months, and that was why even when the market is doing what it's doing today, we investors who are not panicking, because we see that markets might form one reason or the other to pull back, to create opportunity to buy low and also sell high, which is the state of the market we are seeing now. Our market are rallied for straight 7 months, pulling down with all this, with prop 10, the insecurity in the economy in the nation, and all that, or policy managers, not being clear with their policy. All of them are coming to just to put the market in another dimension, another correction, so that we can enter. But it is time for anyone that's playing the market to go for value, because value remains the only thing that can save anyone at the market. Don't just follow bandwagon. You must have a goal, trade your goal, and make sure that you are watching the market. That will help you to navigate whatever that's happening in the market now. Because I see that at the year is coming to an end. I've said anytime that as we have most of the company exchange having December as year end, that will change the face of the market. Fine. Yes, the system banks that are capitalized, put others are going to also meet their capitalization. I tell you that it has another way of impacting the market. Yes, before now or before this government, when the market was building post COVID-19, it is the local institutional investor and local investor that sustain the market. This foreign investor left us all because of what fear of whether we survive, and the companies on the exchange recover and buy price recover. That will see it is not because of the rocket science of the government policy. No, because the company also. That's why I give it to every corporate manager in Nigeria today to navigate within all these headwinds, and now we're seeing gradual stability in FS and other stuff. But I believe that as far the companies on the exchange are strong, we're seeing that there's no need of panicking in the market, but rather invest the world with knowledge. And that is why coming and invest 2020, investment 20 coming on December 6th is is a place to be, an event to attend. Why I say so is that the expert, even though they have discussed with two of them, giving inside what they are waiting for to conclude their presentation material. Notice that they are already seeing what also are saying in investors, that saying that year 2026 be pre-election year, even with all the crisis we are seeing today, that before no election, things also are not being we expect to see liquidity. That is where I'm going. That what will support liquidity, even with the people who say fear of foreign investor going fine. I'll tell you that they've left the market. That's what I point out. They've left the market before they came back. If the market was, if when they left the market was dead, they will not come back. And now they are coming because of the capital gain and other things. The Trump statement and all that. But I will tell you, if US are gradually coming to work with Nigeria, I will tell you, with time, even the CPC, the nation will also be removed. And also, if also the government will look inward and be serious with their decisions and take action and fight bandits and fight all these insurgents or insecurity, that will also further attract. But I will tell you, the nation itself needs to have confidence on themselves. That is where I say internal confidence. I mean, that will start from the policy makers, coming with clarity, and also the perception of what the government is doing. In all that will change the narrative as we speak. And for that, because I said now that rate was sustained, was retained, meaning that yes, cost of fund is relatively not cheap. Also, it's still high as we speak. But good enough as of the first rate cut by 50 basis points, it's expected that it will be followed with another physical to make the economy robust, so that the business will strive. Because I tell you that without economic activity, there's no tax. But if there's cheaper fund, there will be improved activities, improved consumption that will oil the economy, and that. But since they keep it the whole, it's possible that the first MPC meeting in 2026 might come with trade cut. But I'll tell you, for what we are seeing today, that the market has factored this in. That's why that yesterday and today you can see what the market is. But I believe that as the government continue to come with clarity in their task before we enter the that also support the market. Also, don't forget that all these funds are also leaving the market. Once we enter the 2026 and clarity comes, that also come to come back to the market. That means you and I should target those stocks that have value and those that are pulled back, and also that are presenting a lot of opportunity to you to buy. That is where you should be, and that is where you should also put your money right now as you speak. And that's why I said for those system banks that I said, liquidity is what this market, and that is the greatest fundamental in the market anytime is liquidity, and that is what money flow. And that's why I say, when I say at the beginning, it has to follow the money, it's very, very important. Our money flow in the market has gone as low as getting below to 20. And yesterday, you can see it turning up to get to around 35 for that. That is good news. I want to see if it will sustain from coming back to the market, and it is the outcome of this MPC meeting will determine where this fund will come at. Market players, institutional investor, foreign investor, and digesting the outcome. Where will you be in the next 90 days, in the next 120 days? Will I make good capital return from equity with the company dividend that is above 6%, 6% yield plus capital gain? Will I be above what I can get for a whole year of 14% or 16% or 15%? These are the things that will be played in the mind of every analyst, and that also guide where fund will be going. But don't forget that those companies that have value, that have good dividend policy, are the way there are attraction. And when funds are coming, those leaders in their industry are the ones that will rebound. That means as you see stocks pulling back, target leaders in their sector, look at their dividend policy, what is the earning position of them, because the earning power of the company determine what they will pay at the end of the day. Which companies have surpassed their 2024 performance, even in their Q2 or their Q3, what is the impact of the last quarter of the year going to be on this company? Are they going to see better numbers? These are the things we should pay attention to as we speak. At this industrial said, we must look at it. And also, I'm talking about the banks, providing liquidity. And that is good because don't forget during the time of universal last year, we saw how the banks having subsidiary, how they rally all the subsidiary and they use those rally to prove the market then. Now the banks are going to hold company. Even when credit is coming from the central bank, they will know the structure for holding companies in the banking sector, in the banking industry, and all that. For me, it's a clear one, it's a good one. That liquidity will come. And also, if government policy is not clear, like I said, clarity is king. If it's not there, will the bank be lending money to the sector, to the this sector where policy are not, where infrastructure for growth is not there? That is why I said it is time for the economic managers to have work together. Let them be coordination, let them be synergy among them, so that they will know the direction they are taking the economy. Not that they make progress in 2 points or 4 step forward and also make 5 step backward. That will not help the economy as we speak. And that is why with these banks recapitalizing, I see also liquidity in the market going to the future. And also I think insurance also in that category of capitalizing also that is also ongoing till August this year. These are going to provide liquidity for the market. And also the T+2 settlement that will also start from Friday, this week, for going to the new year. That is also a plot that will provide liquidity for also the market. I will tell you, the shorter the turnaround time for buying and also getting the value for your money will also help you, to take decision where funds should be and where funds should not be. For me, this shows that our market is evolving, and it's a sign that yes, this reform was seen in the economy. If no well managed, it will take Nigeria economy and our capital market to the next level. But when there's lack of coordination in this whole reform, it will have, like I said earlier, 4 step forward and 5 step backward. But I mean that both all the regulators, the economic managers should work as a team to show that this economy has a direction in the next 5 years, in the next 10 years. That is where we say, because if you are targeting a $1 trillion economy and there's no coordination, there is no strategy, I'm telling you, it will just be in the paper and put for now. Know that Nigeria is in good work and planning, in good itself, but implementation has always, because lack of clarity has affected our implementation all this year and our strategy all this year. But I believe that by now, that government are listening, that they should, their economic managers coordinate, the coordinating ministers should take action and make that things are working, because in a market where you said they're going to review something more than 2 weeks now, it doesn't seem good. It doesn't, that means we are playing with the emotion or the sentiment or the perception or the trust of the people on the economy. I think the right thing should be done at the right time, and that also will help to to foster or boost world confidence at any time and any day. And that is why we say that yes, if we are saying T+2, this also what going to provide more liquidity in the market, and that tells you that this liquidity are there. As you are buying, you are planning, your turnaround becomes shorter and fund also become easy for you. For me, I believe that investors should take advantage of this, or traders, and also I tell you gradually we will align our market with best practices across the globe, and which is good. But we need to be consistent in our policy, because policy somersault is what factor that that kill confidence anytime, anywhere, that make economy or any nation to remain backward, because you are not following through your policies, you are not following through your plans, you are not following through your strategies. But because they are not clear to those who know that are formulating it, and because it's not clear, implementation become a problem. I think that is area we should look back. Even as we are facing insecurity, insurgence, we should to have a plan as a nation. I'll bring that plan, and if it is clear, I will tell you whoever that comes, whether it be an Igbo minister or Yoruba minister, outside minister, they know there is a clear direction where we are going as a nation. Even our security, actually, if we're able to put everything in order, I'll tell you, it might not be overnight, but if there's consistency, I tell you, results will be achieved at the end of the day. Already, as we speak, I already given insight that my time is up. But before that, we can look at some of the shares or company on the stock on the exchange for us to look at. Quickly call up some of our indicators. We need to know what is happening in the market. Let me look at what is the money flow showing at this hour, because I think you should follow the money. That means we cannot discuss in this market today without looking at that money flow and look at our T line to see its strength coming back to the market. Once able to identify all these that strength to come back to the market, then you can know that yes, you are in the right direction. You need to know whether market is carrying strength. Yes, if you look at what I've got displayed now, on the chart. Looking at only the index, you can see the market is always most about to cross the T line. That was a sign of for strength, and that's why I said 2 days rebound. Let's see it will sustain. Once market cross it, for me, it's a good news. Okay, I said it that market no money flow was almost below 20. You can see it here. But at yesterday, the last 2 trading, you can see the kind of movement yesterday and today. Market's almost looking up, almost getting to 40.38 as we speak. Money coming back to the market, and MACD on the daily chart has given us a signal. You can see that the histogram there is kind of advancing up. It's not descending. You can see that it's advancing. Once you cross the signal line, and also you can see where the bull line and the once also cross it, it's a sign of strength that bull is gradually coming back to the market. And we are saying another 1 month this year, which is the month of December. I believe that this is the right time for any design investor as smart trader to take position in those stocks that have value and those that have history of dividend payment and position. Like I said earlier, and that is why you must mark the date for Invest 2026 coming up on the 6th of December to position your portfolio, because this year I will tell you many investors that have followed us, even though that have not followed us, have made money, and that's why we are seeing market doing what it's doing. It's part of market dynamics. It is for you to change your strategy because events are changing. That is how you can navigate and stay ahead of this market. I look forward to see you all what come after the Saturday, the past Saturday, the Invest 2026 traders and investors summit. Like I said, they'll have about 8 analysts, 8 professionals, 8 managers, and 8 also decision makers to be there to share what they have been doing that made them their companies, also their own portfolio to remain in green, and they have made money in this market because all of them you are seeing there, these are products that players in this market, and they're going to share their ideas and also their own also the goals and also how to trade the year 20, how to invest the year 2026. On this note, I will say thank you. I look forward to see you on Friday by God grace. We are sorry for Monday's program that we have set like this, but all internet will have we are disappointing. That is why. But today we thank God that internet is on now. We look forward to see you on Friday. On this note, I'll say bye.